In Part 3, the art and science of smart investing moves from mindset to method. Joseph and Tom break down the playbook. Relative strength to favor leaders, diversification to spread risk, and rules-driven allocation to know when to play defense.
Welcome back to our no-holds-barred conversation with Tom Dorsey. Tom, we've covered a lot in our discussion, and still a little bit more to go because we do want to talk about the future. But a couple of thoughts before we get there. When I listened to your story and how you got to where you are today, how you started Dorsey Wright Associates, how you become one of the experts on the use of options as a strategic investment, and then, of course, an expert in point and figure technical analysis. I think about we had a parallel. We're the same age. We come from different walks of life, but I found my way in the business the hard way too. Right? I can remember I was in. I went to school, couldn't keep my 2S deferment for whatever reason. I was young and I guess immature. Got drafted into the service after I got out of the service. That was during the whole Vietnam conflict. When I came out of the service, I was fascinated with uptown Philadelphia, which was a cool place then, and that's where all the brokerage offices were. And I used to press my nose up against the window, watching those people running around saying, what are they doing in there? I remember this real middle-aged man came walking out one day to get his shoes shined. And I said, excuse me, sir, can you tell me what they're doing in there? And he looked at me and he said to me, do you believe in America, kid? I said, I do. I said, yep, just served in the Army. And he said, well, they're buying and selling America. If you want, you can buy America. Well, when he said those words to me, we didn't have technology, iPhones or anything like that where I could punch it all up. I had to go to the library. Read about the business and the stock market. And I became fascinated with it. And that's how I found my way into the business. Took a job with a local firm. Philadelphia was a money center. But that leads me to Tom Dorsey, Dorsey Wright and Associates. We talked about it in our other segment. Whereas if you walk in any brokerage firm, there's an excellent chance that they take Dorsey Wright research. You've educated thousands and thousands of financial advisors, originally stockbrokers, then financial advisors through the years. So, Tom, did you ever think or believe that Tom Dorsey and Dorsey Wright and Associates would become a household name in the financial services industry? How do you think you got there, Tom?
Oh my Lord, accidentally all the way. But no, it was that belief in that little old lady and in the point and figure charting that was simple and coincided with my degree in economics, Econ 101 especially. So it was a simple thing. I knew that I could teach this to other advisors, my brothers and sisters, for the rest of my life.
And why is I love the notion and the phrase, the irrefutable law of supply and demand. So why is that important to our business in the stock market?
Well, because the stock market is all price.
It's all price.
When you think about it, what we had at Merrill Lynch back then, you had the best PhDs writing reports and, from the best schools in the world. And they're constantly giving us ideas and we have to mail it to the customer. The mail would take a week to get to him and then he needs to read it, take another week. And then it was forever. And when you think about it, what we got was when you take the fundamental research, let's say I have a funnel and I take all that, I go to Goldman Sachs, I go to everywhere. I get the best fundamental research.
So we want our viewers to envision a big funnel.
A big funnel.
Yep.
And they stick that in there and it's like you're making dinner. Right. And you're pressing the food down there and whatnot, and you get right down to the bottom where the tip is. What comes out? Price.
And price at the end of the day is what really matters most.
That's all there is.
What willing or buy or sell it at.
There is nothing else.
Right.
Somewhere in that bunch of information put in there, it says, "Oh, Mr. Jones is a real good guy. He's a smart guy." Okay, we get that. You know, all the stuff.
Earnings,
Yeah, it-
revenues, all of that stuff.
stuff nobody's going to understand.
Right.
You got to have a PhD
Right.
to understand it. Well, what I understood and what people back in 100 years ago understood, Charles Dow, A.W. Cohen, that the net result of it all is price, and price changes. So let's focus on the tip of that thumb.
So give me the simple definition of the irrefutable rule of supply and demand as it relates to the stock market.
Well, it's simple. When you think about it, if there are more buyers than sellers willing to sell, price must rise. There's nothing else. If there are more sellers than buyers willing to buy, price must decline. So those two things that are happening, the irrefutable law of supply and demand, are causing things to move around. And some people like Charles Dow said, let's chart this.
Yeah.
Let's put this on a chart and see what we see. And what he saw when he was creating a methodology called figuring, he saw points at which stocks had a support, where they would come up to resistance. When they would break out of this resistance, more buyers came in and created a methodology called figuring back then. And that eventually changed to something very high tech, X's and O's. So what he did is he would write the price of a stock as it rose, 20, 21, 22, 23, 25. And then when the stock pulled back to 18, shift columns, 20, 19, 18, and on down.
So you had an epiphany when you read it.
But wait a minute. By the 1900s, they said, well, let's make this high tech. We'll call the stock going up an X, the stock going down an O. So the charts are made of X's and O's. That's all there is. There's nothing that we've taught this to seventh graders at Gates Elementary School, as a matter of fact, in Richmond. Simple. So he created that methodology, and eventually it became point and figure charting. And this is what I saw in that paragraph, that it's the irrefutable law of supply and demand that causes it all, and I understood that completely. And it even said, and I remember, it said, cats and dogs don't go up or down on their own accord. So taking good stocks or bad stocks. Something has to happen to cause these. And by the time I finished that paragraph, I looked over the next page, and there was a point and figure chart there. No words. Perfect for me, no words. And I looked at it, and I saw points of support. I saw points of resistance. I didn't know what to call them, but you could see where it came down. And several times to the price of 30 or whatever, and buyers are coming in there. And then it goes up several times to 40, and buyers are taking it up there. Then it exceeds that level, and it's often. And I knew that day when I saw the point and figure chart and came to the realization it could be computerized, it's X's and O's. It was God sent to me. And I knew what I had to do the rest of my life. I hadn't even read the book yet. But I knew. And it actually became the rest of my life. Everything I did was to get better at that, to help other people get better at that. I was the Pied Piper. I would go anywhere around the world. And it made it easy for me to go around the world because I lived in so many places. My father was career Army. So my formative years, I was in Japan, Panama, Germany, graduated high school in Germany. I had no favorite football team, none whatsoever. I just got one last week. My son-in-law gave me an Eagle shirt.
Wow, so Eagles you're a Philadelphia Eagles fan.
Yes, now I'm an Eagles fan.
Well, you waited, they had to win a Super Bowl a second time before you became an Eagles fan.
I never even thought about this. I never even watched it. Because everywhere I went was soccer.
Right.
Everywhere around the world, we're the only ones who really play football. They call it football, but this is football.
Yeah, so always great admiration for you because you always led with education. Not enough of it in our industry. Rather, they talk into those brokerage terms that nobody understands, right? You bring it down.
So they don't want you to understand it.
Right, exactly.
They want you to say, oh, this is too complicated for me. Yeah. I'll just do what he tells me to.
Yep. You boil it down. You boil it down to the simple concept of markets are driven by the irrefutable law of supply and demand. You put that on a chart, you can see it.
And I just wrote an article called "The Ubiquitous Analogy," and I had a lot of fun writing that article. But that is me. Analogies. Everything I see, I think of an analogy to it. It's my mind. My mind is designed to do that. And like the football things that I talk about, and this was pretty cool. So yeah, it's the analogies that really help me because I want people to understand. So I want to be able to break it down to the lowest common denominator that can understand a complicated subject, but you got to make it so that they get it. And this comes normal to me.
Yeah, and it's not nearly as complex as they would have you believe.
Exactly, it's not.
Yeah,
it absolutely isn't.
Yeah, it's like we've always said together. Investing is simple, but it's hard to implement, right? Because you have to have the discipline, you have to have the process, you have to have the systematic approach.
That's right.
Right, and you got to control your emotions in the tough times.
Controlling the emotions, that's the key.
Yeah,
that's the key. I didn't control my emotions when I was flying that plane and almost lost my life.
Yeah,
at 22 years old. I could have died that day.
Yeah,
I let my emotions override what I saw was dead right,
right.
and what I was looking at was dead wrong.
And I always like the way you connected, those kinds of experiences. I said it before, I'll say it again. You connect those experiences to what your livelihood became.
Yes.
Yeah.
Absolutely.
Right.
So, Joseph, on your side, you've seen from the exchange, being head of the marketing exchange at the Philadelphia Stock Exchange, you know a lot about the back office things and what happens with people who are managing money. Why do so many professionals, underperform the market averages?
Yeah, I think that's a great question. No single answer probably, but what I would say is that I think a lot of Wall Street has surrendered and has offered Main Street mediocrity. A lot of managers underperform because if they can hug the benchmark, not even get into the benchmark, but hug it, it's safe. They keep their job.
Right.
Whereas if they believe in a system, that a systematic approach to try to do better than your benchmark, they're afraid sometimes that they may be way off the benchmark. They had, that's not job security.
No.
So just like you, at NewSquare Capital, we believe in a systematic approach, the way we manage each of our portfolios. And as I said earlier, all of our managers don't do it the same way, but they all have a risk management component. And we do very well over the long term. There's a couple of things. Number one, like I said, Dalbar studies show investor behavior. So the financial advisor has to do their job when you get into tough times. They hold their portfolios on average 3.7 years. It's not enough time, right? You need to commit 7 to 10 years if you want to be in a portfolio that compounds over the years. That's what we strive for. That's why advisors hire us. That's why customers put their trust in us. Okay, our job is to, and by the way, most of our portfolios, except for one, don't benchmark the S&P 500. That's another misnomer. If you're in a 60-40 portfolio, some clients are not educated on the fact that you can't compare that.
No,
the S&P 500.
No. You one side of the portfolio's got the brakes.
Yeah.
The other side, you're pressing the gas as though,
That's your analogy again. I love it.
Yeah. How many times have you got in your car and your left foot is on the brake and you didn't realize when you hit the gas or you're just holding back? That's what happens.
Yeah.
It's exactly what happens.
I mean, at NewSquare Capital, we're methodical, we're disciplined, we understanding client risk profile, working with our advisors, understanding the risk profile. I always say that if you don't have a long-term horizon, doesn't mean that you can't be invested. You just need to understand where the risks are, and you probably should be more conservative because,
What if somebody comes to you and says, "I want income"?
yeah, oh yeah, we
That's what I want. I want income. I want a
We-
check a month.
we have 2 senior fixed income managers,
Uh-huh.
that can meet with the client, basically build a laddered portfolio. If they're in a high tax bracket, we give them we have a municipal bond laddered portfolio, we have a corporate laddered portfolio, we have an enhanced cash management portfolio, short term. I mean, if you have
Yeah, because you have to have that, and I'm glad to hear that you do, because if I'm, let's say a friend comes to me and says, I'd love you to manage my account if you could." So, okay, fine. I don't charge you anything, but I have 2 questions. Do you want your pie in the sky, or do you want your pie on the table? Think about it. So I go to AI and I say, "Give me a picture of a pie on a table." And you have all the nice old ladies in the country coming out on a weekend. They bring the pies and they put them on the table. Then you got another picture of a pie with wings on it, and it's flying. So if you want your pie on the table, you want income, fixed income. I want to start taking money out. And what's the biggest bull market that we have going on now in the world? Elderly. Why? Healthcare is getting so much better. People are living older and need less risk and more income.
yeah, the average age of our client is about 60.
Yeah. So if
That's who has all the money. When you think about it, right? I mean, a lot of the younger generations are doing pretty well these days as well.
yeah, that's true. I mean, when you got trillionaires and billionaires and
Yeah.
well, people are doing great. But I think that's important because a lot of people don't realize that they might want pie on the table. I have a friend who's they're in their 70s, late 70s, and they wanted me to help in the portfolio. I said, "I'll manage it for you." And I explained to them, what do you want in this pie in the sky? They want to change things around. They want to travel to visit their son and grandchildren a couple more times a year. The husband's very tall. They want to fly in business class where the seat comes down. And it's like, okay, I want to enjoy life now. And at the end of life, whatever's left, the kids can have it. But why should I try to grow the portfolio now just so I can give it away to them? Go enjoy yourself.
Yeah, I know. I always we do these family trips, right? And I always tell my children that I'm spending your inheritance. We're spending, right,
Exactly. And they should say, "Great, Dad, go do it."
right, right. Because if I don't do it, they're going to fly first class on their inheritance, right? So I might as well do it right now.
That's it. You might as well do it right now.
Right.
Exactly.
But Tom, just for this segment, just one last question. We spent a lot of time on point and figure relative strength. Um, in your words, point and figure been around more than 100 years. Why has it stood the test of time? Why has it worked all these years?
Simplicity. The simple things in life are the best. Everyone that's listening to this right now understands that. That's the best. Simplicity is the best. That's why. It's easy to understand. It's easy to implement. It makes absolute sense. It's derived from price change, irrefutable law of supply and demand, Econ 101. That's why it does. And it's something that everyone can understand. If I go to you, Joseph, and I said, "Hey, what I do is Fibonacci retracement numbers." "Oh, okay. Can you explain that to me?" Well, I'm not sure I really understand it myself, but how about Gann angles and waves? Can we try that? Or candlestick charts. We could do that. You can't sit down and explain it to a customer. Here you can. When you got the football, you're in a column of X's. When your opposing team has the football, you're in a column of O's.
Yeah.
What do? When it's in O's and you have the defensive team on the field, you put the defensive team on the field. That's what's on. It's not the offense.
Yeah.
So
Go ahead.
it's the simplicity of it and the ability of the advisor to sit down and explain it and make analogies with it so people could walk away and say, "I get that."
Yeah. Yeah. Again, a lot of successful managers out there that use different factors to manage assets. In your mind, if you're a value manager or a large cap manager, you can apply these. In other words, you can use your fundamental approach, right? You lead with technicals. A lot of folks lead with fundamentals, right? We in our shop at NewSquare Capital, we have a manager that leads with fundamentals and macro analysis. We have a manager that leads with the technical side of it, right? But okay, Technicals are going to lead you to fundamentals. You play the piano with both hands. That's your term, right?
That's right. That's what I used to use all the time. I forgot it. I'm glad you remembered it.
Yeah.
Playing the piano with both hands.
Right.
Why can't I start out with the type of stocks that I actually want,
Yeah.
then use the technicals to decide which one of these stocks should I do?
Right. Yeah. So you're a value manager. You could run it through a relative strength,
Oh,
right? And you own the best value. You own the momentum stocks, value stocks in the portfolio.
that's right. Exactly. The ones with the best relative strength in that portfolio. Now, that portfolio may underperform. It may be real slow mover type thing, but that's what you want.
Right.
But you want the best stocks you can have in that, and then have a methodology on how you will change those stocks out. If one of them has a flat tire, I got to pull it over.
Right.
Like Ross Perot would say, when the engine light comes on, you got a problem. Take care of that problem.
Very good, Tom. So in the next segment, we've covered a lot here. We talked about all we've seen, all we've gone through in the industry, the incredible democratization of our industry. It's just amazing to me in my lifetime, and you as well in your lifetime, what we witnessed through the years. And it's not the end. More innovation and creativity to come. We're going to talk about the future of investment strategies and how advisors can win in changing markets.
Sure.
Thank you. So we'll be back. Stay tuned.
A systematic toolkit turns discipline into action. Own strength, cut weakness, and adjust risk by rule, not by mood. In Part 4, they look ahead at AI and innovation, and how advisors can harness new tools without losing the plot.